so that's great too.
Sorry.
And I met Jared maybe a month or so ago. One of our clients put on a big commercial symposium with a lot of different vendors there. I was there. There was 1031 exchange and stuff like that. But what I had not seen in the past, which I thought would be interesting for you, was what Jared presented on when you're handling different properties that have a phase one or a phase two report needed based on some type of contamination, industrial, light industrial, dry cleaners, whatever it would be, and how you can handle that and how you can work through those things with your clients to reduce liability for them as well for the broker too, right, Jared?
Yeah, that's correct. Thank you for that, Doug.
You're welcome. And so he's going to start going over it. And there was an update too in regards to the EPA put out recently too, so you could go over that too if you want.
Sure. Yeah. Thank you for that. So I don't know if you want to pull the slideshow up, and I'll get started. Hang on a sec. I can't see if the slideshow is up. I just see myself.
I don't think it's up yet.
Okay.
You want to tell us about your company a little bit, Jared, and what you do before we get the
Yeah,
slide up?
sure. So Jared Dabrowski, I'm with an insurance brokerage called NFP. We are what you would call as a middle market brokerage, and I specialize in environmental insurance. So a lot of what I do is transactional. The other half of what I do, I'd say, is operational. On the transactional side, we work with many real estate brokers and environmental attorneys to make sure that we can get these deals done. So anytime there's some sort of contamination issue or any question about a phase one, or really anything at the site, that's when we get involved. If you want to jump to the next slide, we can kind of walk you through everything that's there. Perfect, thank you. So within my world, there's many different types of environmental insurance policies. The main type of environmental insurance policy that we work with is what's known as a PLL, pollution legal liability, or site pollution policy. That's the main policy you're going to run into on the transactional side. The other type of policy that you'll see on the transactional side is what's known as an environmental lender liability policy. And that type of policy is going to really only cover the lender. And we'll get into that in a second. The other types of policies that are out there, you have contractor pollution liability policies, tank policies, and there's some different levels of financial assurance policies as well. So as I mentioned, excuse me, the PLL is the main policy that we work with here. And you could use it to represent the seller, the buyer, in some cases, lenders, tenants, and JV entities. And the PLL policy is going to cover any sort of pollution on, at, under, or emanating from a covered location, right? So any site that your client owns or is looking to acquire, if the policy is going to cover that. Now, within there, you have multiple coverages, right? You have coverage for remediation, which is the first thing that comes to mind when everybody thinks of pollution insurance, right? You put a policy in place and it's going to cover any remediation. While that's true, that's not why most of my clients come to me. Most of my clients are buying a site. They recognize that there's some contamination there. They're going to factor that into the cost. But what they're really looking for is that third-party liability coverage, right? Nobody wants to buy a site and then get sued for something that's at the site that they had no, they weren't responsible for. So that's why most of my clients are coming to me, because they don't want to be on the hook for something that's there. Now, pollution laws in the US, you own the site, you own everything on it. Doesn't matter if you caused it or not, they can still bring it to court. Most of our policies, they are going to cover you for defense, which is probably one of our loss leaders, and they are triggered off an allegation alone. So you get that nasty gram in the mail from an attorney representing one of your neighbors, the pollution policy is going to respond to that. You don't have to wait for anything to be proven. You don't have to wait for anything to be found. That is the time when the clock starts. So it's very important. And like I said, that's one of the main reasons that our clients are buying it. The other reason that a lot of our clients are buying it is no further action letters. Anybody on the call familiar with those? I guess I can't see hands going up, so I apologize for that.
Yes, 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 yes.
Okay, so if you have a no further action letter, and if you look at, depending on what state you're in, the bottom line on that no further action letter, it says something to the effect of, we reserve the right to reopen this case at any point in time. Well, a lot of our clients know that the EPA changes regulations and they change them rather frequently. So if you had the no further action letter and 2, 3 years down the line, you get another letter that says, hey, by the way, we're going to reopen this case, the pollution policy will respond. So now what we're seeing is more and more people are concerned about that. And one of the things that I'll touch on in a second here is PFAS, right? I don't know if anybody on the call has heard PFAS, PFOA. It's in everything. It came about a few years ago when they started finding elevated levels in drinking water wells around Air Force bases because they were training with fire suppressant foam, which is one of the main sources. So a lot of our clients are coming to us and saying, look, we have this no further action letter. I know EPA is changing regulations on this, that, and a million other things. I want to make sure that if they do change the regulations and they reopen this case, I don't have to pay out of pocket for it. And that's something that any pollution policy that I place is going to respond to. So if you have that no further action letter, we'll put it in, we get the policy in place 2, 3 years down the line, you get another letter that says, hey, the case is reopened, that policy is going to be triggered. The policies that we put in place on a transactional side, they can be up to 10 years. So basically what you're doing is you're locking in the coverage today. So if I bind a policy for you today, any changes that happen within the next 10 years, they're covered. So the longest term possible is what you want to look for. Within that, in addition to the remediation, you have legal defense, you have coverage of third-party claims. Business interruption is a huge one because any remediation is going to require the site to be shut down for some period of time if you're doing the remediation correctly, of course. And the pollution policy is what's going to pay for your business interruption. We also have coverage for legal defense, which we touched on, non-owned disposal site. So let's say solar panels on your roof, you take them off, they end up at a landfill, it's not the proper landfill, the EPA can come after you for that because it's your waste. In the US, it's cradle to grave. So you own it in perpetuity, and they can come after you. Illicit abandonment, that's another one that we see in your case a lot on the operational side, right? You have a tenant who folds, they disappear into thin air. You can't go after the LLC. You open up the doors to that warehouse or whatever, and you find that it's stacked floor to ceiling with methyl ethyl, whatever you want to call it. You're now on the hook to clean it up. Pollution policy can do that for you, and that's covered under illicit abandonment. I had a claim about 3 years ago. The client, they were an electronics waste or recycler. They folded. The landlord opened the doors to their facility and found that it was stacked floor to ceiling with computer monitors. They reached out to the EPA and said, hey, we have this issue here. How do we come in and how do we deal with it? The EPA came in and it ended up costing them, I believe it was 2.5, 2.7 million to clean it up properly. So that's something that most of your clients, they're not thinking about, right? Nobody's thinking, okay, well, I'm going to have to clean up this pollution mess. That's what this is there for. We can jump to the next slide. I kind of talked through that a little bit. So again, operational, that's, your clients, their existing operations, we can insure for that. Transactional, that's another thing. That's mainly the reason they brought me in to speak at the event last month was your transactional insurance, getting that in place. So one of the things we do there for a lot of our clients when it comes to the transactional side is if you go out and you have let's say you're selling the site to a tenant, your client's selling the site to a tenant, and they come in, maybe they want to do a phase one, but if the use isn't going to change, you don't always have to do a phase one. We can put an environmental insurance policy in place that's basically going to say, look, we'll give you full coverage so long as you, the property owner, don't do any investigation on your own. You're covered for 10 years. We can list the lender. We can get the lender comfortable with it. So a lot of sellers really love that because they don't want anyone doing any investigation. They don't want them doing any digging on the site because if they discover something, we all know what happens at that point, right? It's not pretty. So that's something to take into consideration. If the phase one makes reference to a phase two, which you're going to start seeing in about 60 days, most of your new phase ones are going to call out PFAS, right? They're going to call that out. They're going to say you need to do a phase two. At that point, you should stop, see if you can get an environmental insurance policy, okay? Because if you start sampling, not only do you have to report PFAS, you have to report all the other stuff that you may find. And once you're in the system, you're flagged, right? If the limits change, they know the limits on your site. So maybe you were below detect or below actionable level today, but 2, 3 years from now, if those limits change and now you're above, they're going to knock on your door. And that's just another thing that your client's going to have to pay for. To add to that, the other type of policy that I deal heavily with are lender policies. A lender policy is a little different than your traditional environmental insurance policy because it's not giving any coverage to the owner of the site. It is only offering coverage to the lender. Now, it's also underwritten differently, and this is important. The lender policies are underwritten based off of the financials. They're not underwritten based off of the environmental issues at the site. So you can have the worst site in the world. You can have a lender coming in and saying, hey, I want you to do a phase two. That's the only way I'm going to get comfortable with this loan. You can turn around and say, look, I have this, I'll take out a lender policy. Here it is. We'll pay for it, or you pay for it, amortize it over the life of the loan, whatever it may be. Let's just get the loan done. It's going to offer the lender the protection that they're concerned about, because let's face it, and this is coming from me who ran an environmental risk unit for Santander Bank, so I know what their concern is. Their concern is that the borrower goes into foreclosure and they get stuck with contaminated property. The lender policy is going to give you protection in the event of default and discovery of pollution condition. And then it's going to pay the remaining balance of the loan or the estimated cost of remediation. That's important, the estimated cost of remediation, because they will pay out what a actual consultant is going to estimate to clean it up. You don't have to get into the cleanup. And if you ask any lender if they want to do a cleanup, the answer is going to be a big fat no. So that's kind of that. We can jump to the next slide. So some of the questions that I run into on a regular basis, what does it really take for us to get a quote or a policy? You need to reach out. We need to discuss the property. We need to see what's going on there. If there are any environmental reports, that's really all I need to get started. The underwriting process, generally going to do a environmental review of the site or any available environmental reports. Sometimes we're just working with an address. Other times we're working with a whole slew of reports. So depending on what's there is going to determine the level of coverage or how we structure the policy. The site does not have to be free of recognized environmental conditions to qualify for policy. I'd say 99% of the sites that I have policies out on, they have some level of environmental contamination there. If there's a neighboring property that has recognized environmental conditions, maybe it's impacting your client's property, that's something that we can get coverage for as well. Any instances or conditions that would absolutely prevent a policy from being offered or issued. I would say in my, 13 plus years of doing this, the only site I couldn't get a pollution policy for was for a pig farm in South Carolina. I had an easier time placing a pollution site on a nuclear waste facility. So it's really in your line of work with what you guys are dealing with, guys and gals are dealing with, there's no issue. The typical policy term, as I mentioned, in your case, it's going to be 10 years on transactional, 3 to 5 on the operational. And then policies, so this is really important for what you guys are doing. The policies are 100% transferable, okay? A lot of our clients, maybe they're looking to sell in a year, maybe they're looking to sell a few more years down the road. Your property owner today can take out a policy, okay? And then they can transfer it at the time of sale to the new owner. The reason that's beneficial is number one, it's an asset to the sale, right? You're saying, hey, look, we got you covered for anything that may have happened at the site. Your seller is also going to be listed because, as I said before, anything that happens at that site, they can come back to you. Doesn't matter. You could have been the third owner there. You'll get pulled into it. So having that coverage in place is really important. Lenders, as I mentioned, they do accept the policy, and I discussed how we can just cover those. And then policy period and pricing, it's really going to vary based on the site. So I can't give a ballpark unless I know the site, what's going on there, how long it's been going on there, how big it is, and what the intended use is. But we do give ballparks based on that information. And then the typical coverage limit we see on the transactional side is generally going to be about 10 million. So you usually don't need more than that. We don't recommend going less than 10 million on a 10-year policy because the limits do not reinstate annually. So if you were to have a pollution loss of 6 million in your first year, you're only left with 4 million for the remaining life of the policy period. So, and then if you want, you can jump to the last slide. That's got my contact information, but if anyone has questions, please feel free to ask. I think the slide after that. Yeah.
So when do the commercial agents call you when they're out showing a property, they're selling a property? What triggers them to call you?
So a lot of our commercial agents will call us as soon as they get wind of a property. Our repeat customers, right? So the people who've dealt with us before, they'll call us and say, look, Jared, you know, I've got a client who they're going to put their property on the market. They don't want to do a phase one, or they have a phase one, they don't want to do a phase two. Can we get a quote? I have some clients who are now calling me and saying, look, you know, my parents are getting old. We're probably going to sell the property sometime in the next year or two. I just want to have the policy in place. I will say a lot of my first time clients will call me after they're already down the road and there's some sort of issue going on, and they'll say, hey, look, can we get coverage for this? So we can definitely get it at any point in time. Obviously, it's a little easier to do when, you know, you're kind of early into the process as opposed to a month or two before closing and people are, you know, having a panic attack. I have some deals that I've been working on for 7 or 8 months, just, you know, finessing. So it really depends, but the sooner the better.
And what about if let's say they've got a customer that owns a building and they know there's something going on next door, down the street, or whatever it is. It sounds like maybe a lot of those owners aren't going to know what to do. And so this could be something they could share with those owners of those properties as well.
Yeah, absolutely. If you think your area is impacted by either regional plume, and that's unfortunately, very popular in California, there are a lot of regional plumes. You know, I don't think California is an area that's really worse than any other former industrial area. What you have going on in California is that it is so well documented. You know, you can type in any address on the water board website and pull up every piece of information. A lot of other states are nowhere near as sophisticated as that. So the information is great, but same, it's good and it's bad, right? Sometimes the more you know, the more scared people are to get involved. So
What is the plume? What is a plume?
so a plume would be it's when contamination hits groundwater and just starts to migrate out. So depending on where you are in California, you know, you have some areas where groundwater is incredibly deep, over 100 feet, and then you have some areas where it's much more shallow. You know, where I am, I'm in the state of Florida. I could dig down 3 or 4 feet and I have groundwater, right? So it really varies. The contamination, a lot of the contaminants, they just travel in groundwater, they get mixed in. So you have plumes that are commingled. There's all sorts of things going on, you know, and every time they investigate, they find different constituents, right? Chemicals break down and form other chemicals, chemicals mix with other chemicals. So, you know, one of the reasons you want it in place is if they do sample and they have that no further action letter, and, you know, you go ahead, you get everything in place, and then 2 or 3 years from now, they sample a neighboring site because there's something going on there. And now they'll come in and they'll say, hey, look, you know, we found this on this site and the groundwater is flowing underneath your site. We want to sample your site. So now they'll reopen a case at your site. So reopener is a huge issue for a lot of our clients because the EPA is constantly changing regulations, right? The more science they have, the more they understand that, hey, something is, you know, it's worse for us than we thought it was. And that's how the whole issue with PFAS evolved, right? When PFAS started out, I want to say it was around 2014 is when people started to become concerned about it because it was showing up in these drinking water wells. The acceptable level was like 400 parts per million. When the EPA reanalyzed their information, basically said, oh, wait a second, hang on. It's much worse for us than we thought, and it's tied to all these types of birth defects and cancers and this, that, and the other thing. We're going to lower the acceptable level to 70 parts per trillion. Well, now the drinking water standard, which came out 2 weeks ago, is like 4 parts per trillion. That's unattainable. So for those clients who purchased a pollution policy without a PFAS exclusion, I have clients calling me and saying, look, can we maybe not just renew the policy? Can we maybe see if the carrier is willing to do in our industry what's called a cancel rewrite? So they'll basically cancel it, reissue it with the same terms, and they'll just extend it out for another period of time. I have clients willing to pay whatever it takes to get it done because they know that if they can sell the site with that policy in place, it's going to cover you for PFAS. That's incredibly valuable, right? And that's something to think about. You got to think about the policies as a tool. You can't think about it as your typical, GL or property policy, right? This is really more of a tool to get the transaction done. And we know that regulations are only going to become more stringent in the next coming years. So the more coverage you can negotiate now, the more valuable that piece of insurance is.
How do you see it lessening the liability for the realtors, brokers, et cetera, as they're selling these properties?
How do I see it lessening the liability for the realtors?
Yeah, for the brokers involved in the transaction.
That's an interesting question. I don't think they have much liability associated with the pollution. But I think it really it's going to make them a better broker. The more I think about that, I don't think they really have liability associated with the pollution that's at the site, right? They only know what the information that's available is. So I think it just benefits them. It's going to make their lives easier, and it's going to make them a better broker, understanding that, look, this is out there. We can use this to facilitate the sale, get more people comfortable with it, and make the property more marketable.
What type of lawsuits come up from maybe previous workers on sites, things like that? Maybe somebody sold the property to someone else, and then there was a worker from a previous owner comes back and says, I'm sick or something like that. How does the policy work in that situation?
So it's funny you said that. I had a call with a prospect earlier this week, and they are a lab that tests fire suppressant foam and some other chemicals. And I said, what are you thinking about your former employees, right? Because if you're not a current employee, your worker comp's not going to cover you. So the policies will offer third-party coverage for bodily injury for pre-existing conditions, and there's no retroactive date on our pre-existing condition. If we're giving you full pre-existing coverage, or getting you full pre-existing coverage, I should say, you can really, in theory, have any employee back to, I don't know, 10, 20, 30 years or more come back and say, look, I'm sick, right? And I worked at this site for 10 years from 1980 to 1990. I was exposed to XYZ at the site. They can bring suit against the policy. And we've seen that. I've had asbestos claims. I used to write a large book out of Boston, and we had a lot of former industrial claims, and they would come back and say, well, John Doe worked here for 5 years in the 70s. We're coming after you. And they would put the policy on notice, and you would look. I mean, they were going after every place that the guy ever stepped foot, but the policy had to respond. So 70 is probably not the best example because prior to 86, we can go back to your GL policies. But same thing, you get it. It's just, they can come after you. So if you have the policy in place, the policy can cover you for third-party bodily injury claims. And usually it's something like wrongful death, right? So, grandpa passes away of mesothelioma or something. They realize he was exposed to asbestos on your site. You had nothing to do with it. You just own the site now. And there you go.
Great. Any other questions from anybody listening?
So if anyone has questions, though, anything comes up, if you're have any properties that come to mind you want to talk about, shoot me an email. We can generally turn around a quote in a week or less. I can give you a ballpark indication just based off of, you know, the size of the property, what they do, and anything you know to be at the site. So very easy, and I'm always happy to get on the phone with your clients, even fly out there if I have to.
Right. Okay. Well, thanks for coming in today, Jared. I really appreciate it.
My
I'm
pleasure.
Doug Thompson at WG National Title Company, so we're glad that you came, and we're trying to just, you know, help them have tools when they're working on doing sales.
Great, thank you.
Thank you so
Welcome.
much, Jared. And thank you,
Yeah,
Doug,
thanks,
for
Jared.
making the connection.
My pleasure.
Yeah, and Jared, we recorded this, so we'll blast this out to all of our commercial agents to watch.
Great, wonderful.
Thank you.
Thanks so much.
Okay, and then Jason, did you want to or David, I think I'm not sure if he's listening, but did you want to give us an update on what's happening with our trade show in Vegas? Are you with us? Or David?
I'm here. I'm just waiting for the details from David.
Oh, yeah. Let's see. Maybe he's on a call. David, are you there? Okay, well, let me stop sharing this presentation and we can tell you, let me just find out if David is available. So did anybody, while we're waiting for David, did anyone have any listings or new listings or buyer needs or anything they wanted to make us aware of? Anybody? Okay, Jason, any other
No updates on the
update?
regional side. Nothing really important to announce. It's the beauty of volunteering for that job is I get to listen to all the stuff and keep it away from you guys so we can all do our job. So nothing really to report. I know the ICSC is kind of the focus that we have coming into next month. That's really, I got nothing else. We got a couple new listings that are coming on board. Some industrial stuff I'll send out to the group. We also have a large facility in Koreatown that we'll be putting on the market in the next 30 to 60 days. We'll have more information as it comes, but it's about 156,000 square foot zone medical building. Used to be the old Shriners Children's Hospital. And let's see. I know the team in Long Beach has really been busy with new listings. So I wish a couple of them were on here right now, and they're all busy out showing properties and whatnot. But we'll have a list, and maybe in the next call we'll share all those.
Okay, all righty. David, do you want to give us an update now on the trade show?
Absolutely. Good afternoon, everyone. Sorry, I had a kind of an emergency call that just came in. I had to fade out for a minute. Thank you very much, Kim. As you all know, I think Kim sent out a blast on this. We will be a group of us. I know Jason and his team and myself and a couple of our team members are going to be at the ICSC from May 19th, evening of May 19th through the 21st. Manny has been kind enough, with his assistance, and we really appreciate him doing this. But we have secured a booth, a location where, yes, as you can see on the screen, I don't have the address, but where we will have an opportunity to have our meetings at our booth. Of course, we will have booth time. We will schedule this so everyone gets an equal opportunity. With that, there is a very nominal cost for doing this, and my office can answer your questions on that. I believe it's either, what do we have, Kim? Is it somewhere like around 100 or is it 200, 150? I forgot what the charge per person is.
I think we're looking right now at about approximately $100 per person.
Correct. Correct. And at this time, how many people do we have already? 10, 12, 8?
I think we're about 10.
10.
Mhm.
So, if you're interested in attending, please reach out to me, reach out to Eric or Meet in our office, or just call my cell or text, which is 310-710-5626, and we can explain and give you the whole rundown. But I highly, highly recommend it. Anyone that's in retail, there's no buts and ifs about it. You should be there. You should tell your clients that you're attending. Because of it, you will pick up business. I cannot promise you, but I can tell you that any agent that is doing retail and wants to get attention and want to promote themselves and get in front of a client, this gives you an excellent opportunity to do so. So reach out to us, and we'll give you more details. And aside from that, you have a lot of get-togethers. You have just everyone from A to Z, all the people you see in the streets, your Starbucks, your McDonald's, all those guys. If you have a location that you want to submit, you have the opportunity to do so by being at the ICSC convention. Again, May 19th through May 21st.
Yeah, that's what I was going to ask you, David, if you could tell for some of the people who may not be that familiar with it, or
Sure.
who haven't attended before, like who are you connecting with? What different people are out there?
So I'll give you an example. I've attended the ICSC in a variety of places. Me personally, I do Las Vegas. I've been doing it for the last probably 20 years, every year. I've also done the local ones. They have a half a day or a day. It's taking place, let's say, in San Diego, or a day and a half, or it's a meeting that takes place in Long Beach. I've also attended the one in Chicago at the Navy Pier. The last one was on October 9th, which I attended. That was up in the Hilton Hotel on Michigan Avenue. So because I have involvement in Chicago, and I've attended that. You basically, you have a location example that you have vacancy. You want to go ahead and lease out. Let's say I'm an owner. I have a property, whether it's 2,000 square feet, 14,000 square feet, whatever, you have access to the directory of all the attendees. So what I do is I write them all down, and the ones I want to hit, depending on, just promoting, I will go to those people, shake hands, forward them either information, or sometimes that company has their laptop. You give him an address, he pops it in on the computer, and he says, yeah, you know what, that works. Or no, I have a place that's very close to this, sorry, but I'll keep your card and maybe on the next deal, right? So it gives you an opportunity to meet people and, make a deal, And, I'm just going through it very quickly, but I want to not take too much time. It is a deal-making opportunity. Now, if you have a property that you are selling, okay, you can also promote that, because a lot of these guys also are looking to buy, right? So you may go to, I'm using an example. You may go to grocery outlet says, look, yeah, if you have an opportunity for me to buy, I'd rather buy than lease. So you can also look at it that way. So you have both sides covered. You have a lot of, principals that you're cold calling. Guess what? They have a booth out there. So you have an opportunity to go and stop by and say hi. That's another way. That's another reason for you to attend. Don't laugh. I'm walking at the South Hall, North Hall, and I'm running to people that I've been calling. And, you high five, you hug them, and you say, hey, how are you? Nice to see you. And you've been calling them all this time. So again, guys, it's a win-win situation. And no buts and ifs about it. It's worth it. You got to do it if you are in the business and you're doing retail.
Awesome. And then, of course, at the booth itself, we're going to have the setup there where they can actually
Yes.
reserve some space and meet with those people.
Yes, and like I said, we will go ahead and set up booth time, probably a half an hour interval. And you guys have an opportunity to, invite people to come and, just go at it and present something that you want to present to them, or just a handshake. Hey, how are you? What's going on? How can I help you? Etc. Etc. And that's why we're doing this.
Great. Well, thank you, David, for giving us that recap. And I'll go ahead and send out the information again. As David mentioned, we sent it out last week, and I'll have it so it's fresh in your inbox today so that you all can take a look. And there's a link there for the ICSC actual website, so you can kind of check out what they have to offer.
I wanted to just, if I may, Kim, if I can
Yeah.
take another maybe 2-3 minutes, because we just got a couple of new listings in, and we've got a couple of adjustments, if I may.
Sure.
So the first property is the Dollar General. We actually been going back and forth with someone, but we feel he's going to drag his feet and it may not come through. So I spoke with the owner, and because we are going to be attending the ICSC, and because we are having this meeting today, believe it or not, he said, look, this property has to be sold. So Dollar General in Brantley, Alabama, we lowered it to $795. That puts you at an 8.1 cap rate. I repeat, $795 asking price, 8.1 cap rate. I guarantee you, I promise you, you go out, there's going to be a lot of Dollar Generals on the market for sale, hundreds of them, okay? But you're not going to find more than about 3 to maybe 5 that are going to be anywhere between 8 to 8.5 cap. So I think we're the only ones, plus maybe 2 to 3 other people that are presenting Dollar Generals at over an 8 cap. And again, this is because of where the market is, where the financing world is. The overall seller is super motivated. He wants this thing sold. Dollar General has been there for close to 20 years, and they have another roughly just under 5 years with 5-year options, 10% increase every 5 years. The last 2 5 years that they've exercised, they have been ahead of schedule. So that tells you something about, Dollar General in this location. Brantley is just south of Montgomery and, of course, north of Florida. Please call me and I can discuss the details on how we can put a deal together. We have another building that's kind of an office medical in Pasadena, right across from Civic Center, south of Colorado Boulevard. Phenomenal location, 130 South Euclid. This is about 8,000 square feet, sits on about 20,000 square feet of land. We have lowered the price by $320,000. Again, you heard it correctly. We reduced it by $320,000 because the seller doesn't want to go through a refinance, and the loan is due in December. So they want this thing sold. Perfect for a user/investor, someone that's going to look at this on a long-term hold. Again, that's a building there at 130 South Euclid in downtown Pasadena. The other property, again, an owner that is also super motivated, somewhat of a lender opportunity. This one is on one of my favorite streets, which actually on our 2 other escrows today, Eric is doing an inspection on that same street. We are selling 6342 Pacific Boulevard. It's a retail property just shy of 13,000 square feet with a lot of parking in the rear, city parking lot that goes from block to block. Perfect for a user or an investor with tenant or tenants in mind. Again, no leasing is being done on these because the owner wants this sold. And somebody that takes this down, they can take it to ICSC, has a chance of putting a tenant, possibly franchisee or a corporate tenant in this property. Again, that's 6342 Pacific Boulevard. Please feel free to call me, text me, and I answer any questions you may have on these and the other 7 to 8 other properties that we have out on the market. Thank you so much.
Thank you, David. Did anybody else have anything to share before we log off? Okay. All right. Well, thank you so much. And I'll be sending the recording out for this meeting today, as well as some more information on the trade show that David spoke on. Thank you, Jared, and thank you, Doug, for being here. And we'll see you in 2 weeks. Bye-bye.